Let's discuss the dynamics of the entire banking sector with Mr. Shailendra Bhandari, Managing Director and Chief Executive Officer of ING Vysya Bank. Mr. Bhandari, always a delight to have you back on ET Now. Thank you for joining us. FY13 is over. FY14 started yesterday. Now FY13 was a dangerous and a disappointing year for Indian economy. Do you think for FY14 things are looking up, or it's too early to assume that?
Morning, Nikunj. Well, I guess on a positive note, the sentiment, especially in terms of, the inflow of equity money is improved in the last 6 months, especially with the change in the finance minister. I think also on a positive note, the rupee has stabilized, and I think that has given comfort to some people. But if you're talking about there being a sea change, it's too early for that. Especially the environment for private sector investment is actually very shaky. There is a lack of confidence that you see on the part of promoters, entrepreneurs, not so much because of liquidity, but largely because of not having the confidence that they will get the requisite approvals or the linkages. So that's a bit of a factor, and I guess there is a sense that the next 12 months, 18 months until the elections play out would also see a lot of ups and downs. So it's not as bad as it was 6 months ago, but I don't think we're going to see a huge revival either in the next 12 to 18 months. On the positive note, there is scope to cut interest rates. So that could be the short-term kicker we might see.
Shailendra, hi, morning. So at ING in particular, at the system level, how are you seeing the deposit and credit growth shaping up, and what really is the outlook for FY14?
Morning. So if you look at the system level, and I'll talk about ING Vysya as well. The overall growth for deposits for the last year has been somewhere around 13%. And if you look at the Reserve Bank's forecast for M3, that's also around 13%. So to some extent, it's a bit naive to say that offer higher interest rates and you'll get more deposits, because unless people convert currency notes into deposits, the fact is that deposits won't grow really much more than 13%. I think the way you're going to get greater deposit growth for the system is if the Reserve Bank eases monetary policy and if we have a slightly more flexible M3 target. From ING Vysya's point of view, we are less than 1% of the banking system. So for us to, whether it's on deposits or on advances, to say we will grow faster than the system and with better quality, we've been doing it and we hope to continue doing it.
Mr. Bhandari, your growth and your delivery has been absolutely impeccable. At a time when things are looking tough, you've managed to grow. But now, do you think it will be difficult for you to repeat or sustain such strong growth numbers because of the base effect?
So obviously nothing gets easier, it always gets tougher, but as I said, our market share is so low that to some extent we can swim against the tide. I don't think growth is an issue, by the way. For example, if you want to grow advances faster than the market, there's no problem. Stand on the street corners and offer money and people will take it. I guess the catch is to do it with quality. So we are comfortable that we can do it with quality. And we don't put absolute targets. So, we don't say that we will grow at X%, because we appreciate that, the markets could slow down, they could speed up, and we don't want to be in the sort of situation where we are driving fast down a slow road. What we say is we'll do better than the market, and of course I keep saying this, with better quality.
Shailendra, Basel III norm implementation has already started. What is it that are your capital needs in this regard?
So Basel III, I think, whereas on the surface of it, the Reserve Bank has done a preliminary analysis and they feel that Indian banks are fairly strongly placed. I think that as we go into it, we will discover that there are a host of other requirements, including liquidity, and countervailing buffers and so on, which would require possibly more capital than people anticipating. In the case of ING Vysya, we have fairly comfortable capital. As of December, we had a capital adequacy of 12.5. We raised money last in June of 2011. At that point of time, we had said that that was enough for at least 2 years. So we are quite comfortable. We will raise money as and when required, but we are in no hurry to do so.
Mr. Bhandari, let me phrase my next question rather carefully. You've indicated that you expect the industry to grow above 13 to 14% and you're confident that you will be able to grow above the industry average. Give me an indication. Will you grow 50% above the industry average, 20% above the industry average?
So the 13% number was with reference to deposits. The advances growth as per the Reserve Bank's projections are closer to 16%, and I think this 13 to 16 is probably going to be what plays out for next year. In our case, we are a little frustrating that way. We don't give a formal guidance, but I can guide you to our history where for the last 3 or 4 years, we have consistently grown about 4 to 5% higher than the market. So if the market has grown, say, at 16, we have grown at, say, 20, 21. When the market grew at 23, we grew at 28. So, it's not like we just have one number. But and we don't give a formal number.
But there's every reason to believe that that history will repeat itself.
We would certainly aspire to. As we say, this is an aspiration. And, like I said, to grow faster is not an issue, but to consistently do it with good quality is more of a challenge. By the way, there are also little, optics which will come in now because thanks to the new priority sector norms, it probably makes sense to show a lower number for March because on the basis of that you show priority sector. But I think those are the sort of, jockeying that people will work out, and who knows, maybe in future we'll start talking about average growth rather than quarter-end growth.
But Mr. Bhandari, a mutual fund document often says that past performance is no guarantee of future. What is the secret sauce? How are you planning to grow? Are you planning to gain more market share? Are you looking at branch expansion? Are you looking at new product launches?
So, you're right, and to that extent, we are very conscious that we don't give a forward guidance. So as I said, this is an aspiration. It is born of confidence of having done it, but you're quite right that, there's no guarantee. In the sense, where does it come from? I think it comes from the fact that we have, say, if I look at the lending side, the asset side, we have lots of independent, growth engines. So we don't put our bets on trying to lend big amounts to, say, project finance or to airlines or to real estate developers. We don't do that at all. So we have lots of small pieces of business. So we do corporates, but we also do SME, we do home loans. We've been growing our gold loan business, we do agriculture. So I think the trick is basically having lots of different diverse engines, and even if one of the engines isn't firing, the other ones are. So I think if there's any secret sauce, that might be it.
Final question, what about the retail end of the portfolio? Retail deposits are slowing down. There is intense competition in the retail market. Just about every bank, wants to grab the retail customer. So what's happening there?
So it's a challenge, you're right. I think liquidity is tight in the system. I think, though it's not indicative, but even across the year end, we saw that call money rates had shot up to 17 or 18%. So there's no doubt liquidity is tight in the system. It's part of the Reserve Bank's policy also to keep the system in deficit. In terms of retail, obviously there are two parts to it, right? One is the growth in deposits, and if it's fixed deposits, you can always get deposits by offering a higher rate of interest. But the other one also is that how do you grow CASA? Because as banks, clearly for us, current account, savings account have a higher value. It costs us less, and also statistically they are more stable, they last longer. And it has been a challenge. I think most banks have been seeing a declining CASA. If you look at ING Vysya, our CASA has been steady somewhere around 32%, which though it's not the best, but don't forget that it is the highest not only among all South-based banks, but it's also the highest among all mid-sized private sector banks. So we are, we're not as good as we'd like to be, but we're pretty good.
Mr. Bhandari, we believe that you have a target of 1,25,000 crores balance sheet figure by 2015. Are you on track to achieve that number?
I'm sure we wouldn't have given any such target. Like I said, we're very frustrating. We don't give any guidance. So I can't comment on that.
But definitely you'll make it to the top 5 list of Indian banks, right?
We hope so at some stage.
These are whisper numbers, Mr. Bhandari.
But, we're not going to give a guidance.
These are whisper numbers. You want to comment on a whisper number?
No, I really don't think that's fair.
Okay. Really appreciate your time, Mr. Bhandari, and so glad you could accommodate this interview request.